As the economy continues to worsen, U.S. President Barack Obama faced citizens in California and made a plea for patience, warning things weren't going to be easy.
Again, we're going to have some tough choices to make. I can't just keep on, I can't print money.
But America's central bank is, in fact, creating vast new sums of money, over $1 trillion worth, out of thin air. In a surprise move, it announced it was going to buy large amounts of Treasury bonds, debts issued by the U.S. government, and mortgage securities, including those securities contaminated by the subprime real estate loans that started this whole crisis. The idea is to boost the economy in two different ways.
One, with the increased money in the economy, hopefully people will go out and spend it, and therefore we'll see the economy start to grow again and see jobs created. The other part is that this should lower interest rates on longer-term assets, mortgages, other types of borrowing, and therefore we can see that the financial sector starts to recover as well.
The American Central Bank is reviving a policy that largely disappeared in the 1980s with Ronald Reagan and Margaret Thatcher and the advent of tough inflation-fighting policies. Policies which strictly limited the amount of money in circulation.
The development of these mortgage-backed securities.
William Niskanen headed Ronald Reagan's Council of Economic Advisors when the new inflation-fighting policies were first applied. He says the $1 trillion creation of new money breaks with 20 years of economic orthodoxy and carries risks.
The risk that presents is that within a year or two, we either will face a much higher rate of inflation, or the Fed will have to increase interest rates very fast.
And what would that lead to?
Higher interest rates will slow the rate of growth of the economy, maybe another recession.
No one is suggesting that hyperinflation, the kind that has destroyed Zimbabwe's economy, is around the corner. But for U.S. President Barack Obama and his central banker, it's damned if you do and damned if you don't. Creating more money may help pull the economy out of a recession, but taken to excess, the policy may well plunge the country into a new one. Nick Spicer, Al Jazeera, Washington.